Well, we have made it to February 2026. Hard to believe we're already in the second month of the year. We are just now getting not only the full picture of all the data from 2025, but we now have some initial data from 2026 to show us how the year might be shaping up as we enter the spring market. So let's get to it. We're going to start with 2025 data. This is for the um, five county area. This is just looking at number of sales. 2025 is the green line. And you can see it was generally slow or in line with the last couple years. December, we had rates come down, and we had a nice little spike in closed sales in December. Now, you can see every year kind of there's a little spike at the end of the year. Typically, a lot of people push late November into December because they don't want to close around Thanksgiving week. But that was a pretty hefty spike in sales. So that was nice to see. Sales volume has to do with overall unit price. That was the highest in the past 4 years. If we look at median sales price, still at the lowest point. So we finished out the year at 432,000 as a median home price. We peaked out in 2021 at 476,000. We're now down at 432. Again, that's only about 40 or 50,000 as a median home price. What I can tell you though, as you go up in price, we have seen more significant declines. I think the latest data we have is somewhere around 25% as a market that we've seen peak to trough from peak 2022. Because remember, this is 2021 data. If I go to, here we go. If I go to May, here we are. May of 2022 was 550,000. Now we're down at 432. So there you go. There's your $120,000 price adjustment for a median home in the market. So again, still seeing it on the low end. Average sales price higher. That tells me that maybe some of the upper middle class luxury is kind of pulling up that average sales price. But total listings, the green line, this is inventory, and I'll show you another chart in a minute. We are still very high on inventory and not yet seeing signs that that's going to reverse. Months of inventory, same thing, just told in time. This is Williamson County to the north. Again, nice spike in the number of home sales at the end of the year. Sales volume, again, saw the December bounce. Here's the median sales price in Williamson County. Again, lowest spot in the last 5 years. Last December was 430. This year, 413. So seeing that come down. Average sales price, maybe not as much luxury there. Their price was lower. And again, inventory way higher than even last year. Let's get to Travis County. So this is going to be Austin, east and west suburbs. Number of home sales, nice spike again in December. Sales volume, again, probably more luxury in Travis County. So you're getting that in there. Median sales price, though, again, lowest spot in the last 5 years. Last year was 515. Now it's 500. So again, we're still seeing the market continue to soften a bit. Average sales price, again, at the highest point in the last 5 years. That tells me maybe the upper end of the market had some really nice sales that helped pull that average sales price up. Here we are in inventory, maybe not quite as aggressive as Williamson County, but we're still seeing inventory higher than we've had in the last 5 years and months of inventory. Finally, Hays County. Number of home sales. Hays County, by the way, is the most affordable of those three counties. Number of home sales kind of in the middle. So they are seeing okay sales. Sales volume, again, in the middle, not as much on the high end. Median sales price, pretty tight. I mean, last year was 393, this year 395 or 390, 500. 399 the year before that. If I go back to 2021, 395. So they've stayed much tighter on price in Hays County. Average sales price, again, near the bottom there. Listings a little tighter. Now, granted, this is a lot of inventory, but we haven't seen it continue to build quite as strong as we saw in the other two counties. All right, so that's 2025. The market continued to soften, and we saw the price inventory go up and the price come down a little bit. So how are we shaping up for 2026? So right now, nationally, the housing market is saying that it's stuck in neutral. Rates are coming down a little bit. Price growth flattening. More, we're seeing inventory go up in numerous markets that didn't have inventory climb before. Again, the Fed announced in January they're going to keep rates stable for now. So mortgage rates are really going to follow the bond market. I've said that ad nauseum, but pay attention to that. The bond market had some shocks when we had the whole Greenland issue kind of in the headlines. And so the bond market it kind of came up a little bit. That's kept interest rates above 6%. Mortgage applications are falling, but they're saying buyer activity remains stable. New listings are up, and this is nationally. And then they expect slow and steady price growth. We'll see if we're going to have improvements on price. So this article, population growth also slowing due to historic decline in net international migration. However, buried under this headline is not all states are equal. So let's get down to Texas. This is where we still continue to shine. Most populous states right here. Let me pull this up. So right now, California is number one, Texas now number two, well ahead of Florida and New York. And that was not the case 30 or 40 years ago, but Texas now the second most populous state at 31,700,000, California 39.3. If we go by numeric growth, just number of people, how many more people did they add between 2024 and 2025? Texas is killing everybody. I mean, we added almost 400,000 people in 1 year. The next most populous state got less than 200,000. So we doubled Florida and more than doubled everybody else. But the busiest states for in-migration, Texas, Florida, and North Carolina. And then if we go to top 10 states for percent growth, now remember, we're way bigger, so our percent is going to be harder to move, and yet still we're in the top four. If we look at South Carolina, they're about 5.5 million, but they grew at 1.5%. Idaho has 2 million, North Carolina, 11 million. They're all growing over 1%. Well, so is Texas, 1.2%, but that's based over 30 million people. So we, again, continue to be a very high population growth state. This article got my attention. I question it greatly. It says top 10 hottest zip codes. And the one it mentioned in Austin was 78701. That's downtown. So if we look at downtown, it is filled with skyscrapers, condos, new office towers. Like downtown looks super busy. But if I look at the data, this is downtown data as of January this year. We have a year and a half of inventory. If I look at the active listings over here, it says 229 active listings. Guess how many sold in January? 7, not even 10. So we're talking a massive amount of inventory and not many people buying. So if it's the hottest zip code of people moving, the only conclusion I can make is they are renting these apartments because there's zero chance they're buying because it's flooded with inventory and very few sales. So that is downtown Austin. Let's take a look at the metro as a whole. It's looking okay. Still, I would argue a buyer's market. But if we look at active sales, this is again January and not all the data is in. Okay. So there's all the stuff that maybe closed last week. A lot of those agents haven't gone into the MLS yet to put the data in, close the listing. So just know over the next week or two, we'll probably see the January data climb. But anyways, active listings were approaching 14,000 just to start the year of listings. And we sold 1,400. Okay, 14,000 listings, 1,400 sales. That's 1 out of 10. So 1 out of 10 sellers got an offer and were able to close in January. I expect we'll see that trend up a little. But again, right now, supply is well outpacing demand. I'm not seeing that pivot yet. Here's what it's like for the past 4 years. So this is active versus sold listings. Green is active listings. And this is just single families. This isn't even condos and duplexes and everything else. It's just single family homes. You can see here was the end of the pandemic, early January. We still had a hot market, tight inventory, as many buyers as sellers. And then rates shot up over that spring from like 3% up to 6.5%. And it flooded the market with inventory because it turned the buyers off. And so what happened is every year we've had fewer and fewer buyers at our peak for the past 4 years. We've continued to see buyer activity just kind of trend down. The question is, will it turn back this year? But you can see inventory really climbing Because what happens is these sellers try to sell, they don't sell. They come back to the market the next year. Maybe they sell, maybe they don't, or they rent the house out for a year. If they don't sell, they come back again. They come back again. So what's happening is not only do you have 2025 sellers last year, but you had 2022 coming back and 2023 coming back and 2024 coming back. So a lot of sellers just cannot find their buyers. Why? Because there aren't enough buyers to buy everything in the market. Is that going to change this year? This could be one of the things that could change it. This is our mortgage interest rates. We're sitting around 6.16%. Last year at this time, we were at 7.16%. So one of the reasons stuff wasn't selling is interest rates were just really high. It was really hard to make the math work. Prices have had to continue to come down to make the properties more compelling for buyers and to compete against all the inventory in the market. We do finally have rates better. I think there's still consumers that would love to see, low 5 or even a 4 on the front. I am not one to predict that we're going to see that. I think if we get lucky, you'll be able to get a 5.5, 5.75. I think long-term, that's an amazing interest rate. So this is not a bad place to be. I think it just comes down to affordability. Can buyers see the value once they run their math that they can make that mortgage payment, live in the house, feel comfortable about their job and the economy? All those things continue to trend. So if you are a seller and you are planning your listing for this spring, here's your competition. We're going to have a lot of inventory. So it really comes down to getting that house in great condition or providing a deal of value compared to your competition. Somebody said it the other day, I'm stealing it. Buyers either want a diamond or they want a deal. They want a diamond, the best house they can find for the money. It's in perfect shape. Everything's updated. Or they need a deal, because if you're average and they're going to look at 20 other average homes, you better be the best average home they can buy for the money. So that is what buyers are looking for in spring 2026. If you are a buyer right now, it's a great time to get underwritten for your mortgage. Get prepared. This is the time, the season when you need to start getting your pre-approval ready, start getting your financing ready so that you're ready when you find the right property. You're going to have plenty of properties to look at. And I'm not predicting yet that we're going to have this wave of buyer demand. That could change depending on how things play out. But for now, I think we still have a good year, maybe 2, where it's going to take time for that inventory to kind of top off and turn the corner. Anyways, hope this video was helpful. I'd love for you to follow our channel each and every week at Ryan Kelly Group. You can click that subscribe button. And of course, if you know somebody looking to buy, sell, refinance, or invest in the Austin market, would love the opportunity to chat with you or anyone you can refer. Anyways, we are warming up this week. It's going to be in the mid-70s. It's going to be nice here in Austin. And I will be enjoying the warm weather while I watch the Winter Olympics. Can't wait. Anyways, look forward to talking with you guys next Monday. Thanks.